Hello friends, welcome to the English version of financial planning. You are aware of the lockdown because of coronavirus pandemic. In this crucial situation, many people do not have a financial plan and as a result they are financially unstable. An effective financial plan can help you during your hour of crisis. The term financial planning isn't that difficult as it sounds to be. Most of the people in India avoid this essential step of financial planning, thinking it to be difficult and expensive. So in today's video, we will learn how to make a simple and an effective financial plan within your budget. There are three major steps in a budget financial plan. First, protection. Second, emergency funds. And finally, investments. A good financial plan is the one which can protect your family in your absence, and this problem can be solved by a life insurance. This step is very essential if you are the sole earning member of your family. The best option in this situation is a term plan. A standard life insurance offers a policy cover of 10 to 15 times of the yearly premium, whereas a term plan offers a policy cover of 1000 times of the yearly premium. Let us understand this with an example. For instance, your policy premium is Rs 10,000. In this case, for a standard life insurance plan, you will get a cover up to 10 to 15 lakh rupees. In case of a term plan, suppose your premium is Rs 5,000. For this, you will receive a policy cover of up to 50 lakh rupees. The difference between a standard plan and a term plan is that you will get only death benefit in a term plan and no other returns. If your age is 25 to 30 years, then you can get a term plan within Rs 4,000 to 6,000 per year with a policy cover of 50 lakh to 1 crore rupees. Many people go for a standard plan as an investment, but this is wrong. You should never opt for a life insurance as an investment tool, as its primary goal should be to protect your family. We will discuss about some of the top investment tools later in this video. The second important part of protection is health or medical insurance. We all know that medical expenses in a good private hospital for a week can wipe out all your savings. This is why a medical or health insurance is very essential. If you have a small family, then you can go for a family floater plan, in which all your family members get covered under one plan, and the advantage is that you don't need to opt for different plans for each and every family member, and the premium is also low. For a small family, you can get a family floater plan of 3 to 5 lakh rupees, which would cost you around 4,000 to 8,000 rupees per year depending on your medical history and policy cover. One should start life insurance as early as possible, that is, as and when you start earning, because its premium depends on your age and is fixed throughout your life. But the premium of health insurance is updated every year or every 2 years with your age. Let us now discuss about emergency funds. As the name suggests, this savings can be used during emergency situation. We do face emergency situation in our lives at some point of time or other, and at this point of time you can rely on emergency funds without affecting your investment plan. You can meet up all your expenses, your SIPs, your EMIs, etc. from your emergency fund. Now the question arises, how much money should you save in this fund and where should you park your savings? You should keep the expenses of 3 to 6 months in this fund. If your EMIs, SIPs, food and other necessary expenses costs around Rs 20,000 per month, then you will have to keep at least Rs 60,000 to Rs 1,20,000. That is, expenses for a minimum of 3 to 6 months in emergency fund. This will help you to meet your expenses in time of your need without any difficulty. You can keep this fund in a savings bank account. You will get an interest of 3.5% to 4% in a normal savings bank account, but few banks also offer you an interest rate of 6%. You can also keep this money in liquid fund where you can get an interest of 6% to 7%. But there is a disadvantage with the liquid fund. Some of the liquid funds may take 24 hours to credit the amount in your bank account. Now let us discuss about retirement plan. Retirement plan is one of the most important aspects of financial planning. Two best options for a retirement plan is NPS, that is National Pension Scheme, and the other option is mutual funds. We find a lot of variety in mutual funds, but there are mainly two varieties. One is normal mutual fund and the other is ELSS fund. In ELSS funds, you get deductions for income tax under 80C. Therefore, this is the best and the most famous retirement plan. And in case of government employees, those who have an option of NPS, they should definitely opt for NPS because NPS can give you far better returns than general retirement schemes. ELSS funds have a lock-in period of 3 years and therefore you cannot take out money from ELSS fund before 3 years. Besides these, everyone should invest some amount of money in gold. The best option to invest in gold is sovereign gold bonds. I have added the links of sovereign gold bonds and mutual fund calculator in the description box of this video. By now, I hope this video will help you a lot to plan your own finance within your budget. This is a very basic financial plan which a person can use for himself. But every individual has his own needs and goals according to his age. So the financial plan for every individual should also be customized. You must be happy to know that we are going to provide you your customized financial plan absolutely free of cost. So please send your details in the email ID given in the description box. Thank you guys for watching this video. Please hit the like button and subscribe our channel. Bye-bye.